Steve Fried with the morning grain comments. Well, markets right now overnight was a little weaker following yesterday's sell-off in the corn and the meal market and the wheat market. The market, I think, in general is lower right now. You've got beans down a couple cents at $12.26, corn down a penny at $4.61, and July wheat down, Chicago 6.96, down 4 cents. Stocks are lower, dollars higher. Crude's up a little bit closer to $80 on talk of OPEC cuts and maybe a little bit increase in demand. Big picture, we're still talking about different Fed comments. Some feel that there'll be a rate cut in September. Others feel that rates will stay higher longer, and that keeps the financial markets kind of trendless for now, but seems like we're seeing a little bit of selling in the stock market if interest rates don't come down. In the grains, we saw that the USDA had estimated soybean plantings at 68%. 63 is average, so we saw the July SEP spread break 6 cents, and now is only at plus 17. Combination of a little bit lower export demand, lower Chinese crush margins, lower domestic meal basis, and this soybean plantings ahead of average has offered some negative bias to July beans at that $12.50 price level. Brazil harvest is close to being done. Southern weather looks to be better for harvest completion there. And I think that the soybean basis in Brazil is weaker because of the lack of China new buying. Dalian soybean and soybean meal prices were lower. Soybean oil prices were higher. In the corn market, again, our corn exports today are above last year, but slightly below what the USDA is forecasting. Corn plantings is 83% done versus 82 on average. So anybody that thought we might see reduced corn acres or replant probably is that's not in the cards right now. It was interesting that China authorized 2 GMO Argentina corn varieties for import, and that's offering some resistance to the Dalian corn futures and could result in less Chinese demand for U.S. corn, although we are competitive versus Ukraine, and the market still feels that the fact that the South American corn production could be down 16 million tons from USDA's numbers could increase U.S. corn export demand. The wheat export shipments to date 672 versus 720. Winter wheat ratings dropped 1 percentage points to 48, while 88% of the spring wheat crop is planted. So I think that what we're seeing is some technical weakness in the wheat market if the farmer sells wheat here in the U.S. off the combine, and we're still looking at some dry weather in Russia, but the Shukovay concerns a little bit less today than it was last week. The Western Corn Belt is supposed to get some rain, and so even if it turns drier, it may not be dry enough to rally prices.